How's it going, you guys? My name is Charles, and this is the Trader's Corner. Today, we're going to be talking about 6 reasons why I think that every trader should look to augment their trading strategy with a trading algorithm. So let's get started. Like I said, my name is Charles, and I've been trading or learning to trade, teaching myself to trade for about 5 years now. In that time, I've traded a variety of strategies, anywhere from strict price action to using indicators and any combination of both. Along that way, I started to learn how to code as well, and I've started to use coding to augment my trading. Now, notice I say augment my trading because I think a lot of times when people start to talk about doing algorithmic trading, you can really fall into one or two camps. It's either you use it completely and you never really discretionarily trade yourself, or you never really use an algorithm and you only discretionarily trade. And I think that kind of separating the two and feeling the need to always separate the two is a bit of a folly on a lot of traders' parts, because I think that augmenting your trading or your discretionary trading with a trading algorithm, or augmenting your trading algorithm with your discretionary trading, if you're good enough and at that level, can be very powerful on a lot of different ends. So I'm going to give you 6 reasons why I think that augmenting my trading with the algorithms has been very good for me and been very helpful for my trading. So first and foremost, it's speed and efficiency. So as it relates to trading, you can really only trade one thing at a time when it comes to discretionary trading. You can be keeping your eye on a lot of different pairs or different, indices, whatever it is that you decide to trade, futures, commodities, whatever. But when you start to enter a trade, you kind of have to finish entering that trade before you can go about entering another trade. Because at the end of the day, even if you're taking the same exact opportunity on 2 different pairs or 2 different indices or 2 different futures, you likely have to change the contract size or the lot size depending on what it is that you're trading. So you can only trade one thing at a time. If you have an algorithm or multiple algorithms up running and looking for the same opportunities or patterns on different pairs and different indices and different futures or different commodities, you can trade multiple at the same time. Now, you may not want to do this. You may want to only trade one thing at a time, and that's completely understandable. But if you're somebody who wants to be able to be exposed to multiple opportunities at once, using a trading algorithm to augment your discretionary trading is a great way to go about doing that. Now, number 2 is the consistency. And this has been the biggest help for me in my personal trading, because as it relates to trading, and especially as my trading journey, sits right now, I'm still working that 9 to 5 just to kind of keep throwing fuel on the fire of the money that I trade. I'm focused really heavily as well, building out a fund for friends, family, specific investors that kind of fit a certain criteria. And so because of that, it's been very helpful to have the algorithms up there running while I'm not always able to be as consistent as I need to be when it comes to being in the markets discretionarily. Because I'm not going to say that you can't find success being in the markets discretionarily. You definitely can. I found that success. I've seen other people find that success themselves, but the success almost generally comes no matter what kind of strategy you trade. It almost always comes from your consistency in showing up to the market the same way, your consistency in trying to trade your strategy the same way, no matter the results. Consistency. And as humans, the fact of the matter is we can't always be 110% consistent. So in those periods when we can't be consistent, our algorithm never has that issue. It never has those emotional biases or those issues that we might have in terms of life coming up or anything like that start to affect and bleed into our trading like it might affect any human. And that's completely fair and a normal thing to happen. But you don't want that to affect any money that you have coming in, especially if trading is how you feed yourself, right? And that's why I think, again, an algorithmic trading strategy that doesn't have any of these emotional biases or doesn't have to deal with life, for example, is a great way to augment your discretionary trading. Now, number 3 is backtesting. Now, I said consistency is the biggest one. I would say backtesting is number 2 for me, because for me, one of the things that I love the most about trading is the idea generation, right? And that's one of the things that's also kind of struck me about coding is you have an idea, you try to generate it, you see what's wrong with that, you see, kind of your limitations or ways you can get around these limitations and trying to get this idea to fruition. And trading is a lot the same way, right? You have an idea in terms of a strategy, you put it together, you see how it works, you backtest it, right? But that backtesting process is very involved. We actually have a whole blog about backtesting where we go through the entire process in terms of what you should do step by step as a discretionary trader who's trying to backtest their strategy and know that they're taking something quote unquote repeatable to the market. Now, again, like I said, it's a very involved process, and the way that I do backtesting to make sure that I'm very comfortable with my strategy can take anywhere from a few weeks to maybe even sometimes a month to a month and a half to 2 months, depending on what the strategy is and what it is that I'm testing and how long it takes to test. But if I know how to code, and the strategy I have is, say, let's say I have a technical indicator based strategy idea, I can quickly code that strategy, have it run through some backtesting software, and see how it plays out, right? And it's a lot quicker, and usually it takes you about a day, if that. It depends on how long it takes you to code something, right? So backtesting has been huge help for me as it relates to coding in my trading. Now, 4 would be scalability. Now, this kind of goes back to the speed and efficiency thing that I was talking about before. But again, if you have a strategy that you know works and you have seen work yourself discretionarily across a few different pairs, then you can, again, if you can repeat that strategy in code, you can automatically start trading that strategy on multiple pairs at once, or multiple indices, or multiple even asset classes at once, right? You could have something trading on Bitcoin and the same thing trading on Euro USD if you found something that works on both, right? Like I know, for example, if you know the name Austin Silver, a lot of his stuff works very well with Bitcoin, very well with the major US indices, and very well with Forex. And actually one of the strategies that I've coded from a technical standpoint is a mimic of his strategy and his implementation of one of his entry signals, right? So, and I've seen that those results play out as well in the back testing, right? And I think that's another thing, again, going back to the back testing, it allows you to give another sanity check on what it is that you're doing, right? Because I can now take that strategy into the live markets with a little bit more confidence that it's going to work if I am able to execute it on a consistent basis. Now, number 5, in terms of how you can use coding to augment your trading, is definitely better risk management. Now, like I said, and again, this goes back to this idea of consistency that we were talking about before as it relates to traders and their emotions, biases, what have you. If you are, maybe not as quick on the keyboard and you mess up the risk management, or you're trying to be quicker on the keyboard and then you fat finger something in, it's a lot harder for an algorithm to fat finger something, right? It's generally going to run what it is that you gave it. So if you have an issue, it's likely was there before. Right now, I'm not saying that your algorithm can't run into issues, while it's trading, or, run into errors that may not have been spit out while you were backtesting. That's definitely something that can happen with algorithms, and why I think it's always good to monitor your algorithms and, like I say, augment your trading. Don't wholly rely on algorithms is the way that I see it. But it's a lot harder for an algorithm to fat finger something or mess up the risk management than it is for a human to do so, right? And another great example of this is trade limits, or daily trade limits that you set for yourself. If you tell an algorithm in a way, right, through coding, which is something that I've seen, throughout this day, if throughout this day you take more than 3 trades, shut down, right? Or if throughout this day you take 5 trades and they're all losers, shut down. But if you tell that to yourself, you have to trust yourself to actually shut yourself down. And not everybody can do that every single time. And then you might lead yourself to a blow up, right? So better risk management is number 5, and it's definitely a huge way that's, helps a lot of traders in terms of augmenting their trading with coding. Now, the last way, number 6, it's generally cost effective. I don't mean money in terms of like cost and all this kind of stuff, but I mean time, right? And cost, and that's kind of what I mean in terms of cost, because I think time is the biggest thing that we give up as traders. I think that's another thing that a lot of traders don't like to admit to themselves, because if you think about it, like I was just saying, a big part of being a successful discretionary trader is putting in a lot of time with the charts, whether that's doing your pre-work, your post-work, during the market, back testing, whatever. It's putting in time with the charts. It honestly, to get good at trading, you're gonna have to put in more time with it than you would put in with a lot of other things. And I've seen it this way with myself. It can take up more headspace than even your 9 to 5 and all this kind of stuff. And not only sometimes headspace, but also time, right? Because maybe you are still working that 9 to 5, but you have to give all your time before and after to your trading to make sure that you're doing the things that you need to be doing to stay consistent in the market. Now, some of that stuff maybe you need to, weed it out of your kind of daily routine, or maybe make it more efficient. And that's the process of growing as a trader, learning more about yourself, learning how you could work better, faster, smarter, all this kind of stuff, right? And that's kind of the journey of it. That's one of the things that I love about trading as well. It holds a good mirror to you. But at the same time, as it relates to time, and really the most precious resource to me being time, it makes it easier for me to take those moments when I want to take those moments as it relates to trading, right? Because say, for example, I have these algorithms up and running now, and I know that coming up, for example, and this is I'm recording this on January 29th, 2023. So I know that coming up soon for me, a big thing is what's called Mardi Gras. Now, Mardi Gras is, kind of something that we put on New Orleans originally. And I know that I want to be able to go to Mardi Gras, but at the same time, Mardi Gras happens in the middle of the week. It's one of those weird holidays just in one area of the world type thing, right? And so because of that, like, people are taking off where I'm from in New Orleans, like Thursday, Friday, Monday, Tuesday, Wednesday, but like those are big trading days. So it's like that's basically a whole week that I'm losing in terms of trading. Now, if trading is how I feed myself, I can have my algorithm still running and trading for me. But if I don't, then I can't trade for that week. Now, it might not be an issue for you in terms of how your strategy trades. You might not really trade some weeks anyway, so it's not really that big of a deal. And that's the case for some strategies, and that's really kind of how my strategy is kind of developed and evolved. But I know that earlier Charles, the Charles before, and the first strategy that I had that found some success, it was a daily, day in, day out, really, intraday to almost scalping type strategy. So because of that, me losing that week was actually probably going to be pretty big in terms of my return. So that's kind of like the last thing that I would say in terms of like, it's great for giving your time back to yourself in terms of trading, right? Because I think as well, especially as you start to go full time, you can find some more time in the day, especially if you kind of compress your trading to certain hours in the day, right? But then at the same time, again, if it's feeding your family, if it's feeding you, all this kind of stuff, you feel that more pull to stay with it, stay at it each day and all this kind of stuff. And having these algorithms on the back end that are there doing what they're supposed to be doing because you're checking up on them, making sure they're operating the way they're supposed to be operating, like I recommend with everybody who gets into algorithmic trading, it's a lot easier to kind of sit there and be okay with not being at the charts, right? Again, I just gave you 6 advantages, but I would be remiss to say that algorithmic trading is not all advantages. There are obviously some things that you still have to keep up with. And like I was just saying throughout the video, it's not just you press a button, you turn it on and you forget about it, because you have to make sure that the algorithm is doing what it's supposed to be doing, right? So for example, my algorithm, I have a machine learning algorithm up right now running on some futures. And so it generally takes a trade at the exact same day, same time every single day, right? It makes a prediction on where it thinks the stock price or where it thinks the futures price is heading for the day. And then it, places the trade at that point in the day, or at the point of the day when it generally places its trades. So, I wake up to this in terms of it's generally when I'm asleep. So I wake up to it, an alert on my phone. And generally one of the first things that I do, not the first thing that I do in the morning, but like, I'll meditate, all this kind of other stuff, like get my morning started. One of the first things that I do when I sit down at my computer is I make sure that the trade that it took, it should have taken it, right? And obviously with the machine learning algorithm, it's a little bit harder because it's more kind of quote unquote black box. You got neural networks going on and all that kind of stuff. But especially as it relates to these technical analysis algorithms that I have running up, I go in, I make sure that it took it on, this candle. Yep, that's right. That looks good. That's where it should have taken it because it did this pattern. I was looking for that. So cool. So, there definitely is some elements of having to monitor the algorithm as well, but also you might have to make some adjustments as you go along the way, right? Because the thing with backtesting, and this is true for any trading strategy out there, past performance is not indicative of future results, whether that's discretionary or algorithmic. So just because you're trading an algorithmic strategy does not mean that you get to not worry about keeping up with your edge in the market, making sure that your strategy maintains its edge in the market, right? And backtesting and making sure that that's the case, because that's the same thing you have to do as a discretionary trader, and you have to do that with algorithmic trading as well. So I hope you guys enjoyed this video. Hope it provides some value to you guys, and join us next time. Thank you.